Find ourselves in this incredible situation where next week is the only thing that's guaranteed is it's going to be entertaining, right? It's definitely going to be an exciting and entertaining week next week. All right, hello and welcome to Camel Finance. I'm your boy Camel, and I did tell you this week was going to be amazing, and it certainly was, right? It certainly has been a brilliant week. I've got not a lot to say today, but what I have got to say I think is quite important. So let's get straight into it. Yesterday, Powell spoke about a strong labour market, and of course, the stronger the labour market, the more likely we are to see the stock market move higher. Right now, there's not really any case. There's no foundation to be bearish equity markets, even though the majority of market participants are indeed bearish. But of course, my favourite thing about when we see a majority position bearish is markets always move to harm the most amount of participants, right? And that tells me the path of max pain is, of course, a higher stock market. And I believe this is true of Bitcoin as well, since I'm still seeing an awful lot of people call for lower numbers, including silly numbers like 8 or 10 or 12K. Moving back to this labour market, you can see this green band, right? In this green band, whenever we oscillate around here or all of this, right, very good things happen to the stock market when you zoom out. And right now, we're still kind of oscillating in this neighborhood, aren't we? If we continue to do this, then we are likely going to continue to see the stock market move higher. If I clean this chart up a bit, notice how we're not even in this blue zone, right? If we were to come down here and start to chop around, this could be a warning sign, an early warning sign, just like back here. Because when it happened back here, you can see the stock market started to go sideways and then put in a top and trend down. And then, of course, as we fall into the red, that's when we see the true bear market unfold. Same is true here. When we fall into the red, we see the true bear market unfold. And, of course, for the C19 plunge back here. But as it stands, again, if I clean this chart up, look where we are, okay? All the while we're doing something like this, then there's no reason to think that we're not going to continue higher. And like I said, the path of most pain is likely higher for the stock market since everyone is so bearish. This tweet right here is one of my favorite tweets that I've read of late. I can't remember the last time I read a tweet as good as this one. Check this out, okay? Let's play Hide the Bailout. It's my favorite game because politics is all about misdirection. Everyone scrutinizes every line of the Fed balance sheet, so they can't hide anything there anymore. Now, they're trying to hide them on the FDIC's balance sheet. Of course, this is the Federal Deposit Insurance Company or something along those lines. Take a look at the hard right edge, okay? Look at this. So instead of stealth QE that identifies as a BTFP, right, a bank term funding program, where essentially it is QE, they're still creating money out of thin air, but instead of just injecting it straight into the markets and adding assets to the balance sheet of the Fed, because again, people keep an eye on the Fed, they will be able to scrutinize the balance sheet and spot that this is happening. Instead, they disguise the QE as a bank term funding program, which is essentially printing money and loaning it to banks in order to prop them up and bail them out because they are sat on massive unrealized losses as a result of holding those bonds, following, of course, what was the most aggressive and fastest and ferocious rate hike the world has ever seen. And once more, we are now seeing a stealth form of QE, this time identifying as something different, this time identifying as the FDIC balance sheet expansion, as you can see right here. So the FDIC is hiding the money lent to the likes of JP Morgan to gobble up bankrupt regional banks like First Republic. And you can see that right here on the FDI balance sheet, right? So this is pretty insane. You can see this here. They are receiving huge amounts of money. They're receiving huge amounts of funding. And until now, it's been undetected. It's been undetected because people were only looking in the direction of the Fed balance sheet. Keep in mind, the FDIC is a direct arm of the US government. So if they need money to fund loans to banks, it must be financed by Janet Yellen at the Treasury. When the banks start going bust again, look here for the record of the bailout. While the Fed might be tightening, the entire US government is loosening monetary policy. Don't get it twisted. Yield curve control equals $1 million Bitcoin price. And I've been getting one of the biggest criticisms I get on this channel is, where's the liquidity going to come from? Where's the liquidity going to come from? Well, just take a look at the Bitcoin chart, okay? That will tell you all you need to know. It's going up in practically a straight line ever since the November lows. The stock market, although we're in a corrective phase at the moment, is likely going higher as well and has been doing really well all year. There is plenty of liquidity in the system. Not to mention, of course, it is observable and measurable when looking at things like this and that BTFP that I was talking about earlier. Over in the world of cryptocurrency, one of Switzerland's biggest banks is going to offer Bitcoin trading to customers. So again, we continue to see more adoption and we love to see that. We also think that Bitcoin is about to start its next bull run. We're about to witness the realized price flip long-term holder realized price, which historically has always triggered a bull run. We can also see the aggregate cost basis of the short-term holders' realized price starting to surge again. Different cycle, same mentality. And so orange above blue, and we ignite a bull run for Bitcoin. And here's the zoomed out version. Take a good look. When this flips and starts to move up and spread out, so we have blue at the bottom, orange at the top, we would expect to see Bitcoin move higher. Again, I show you yet another chart that points to higher Bitcoin prices. And speaking of charts that point to higher Bitcoin prices, thanks to JJK for pointing this out to me. Check this out. For the third time in Bitcoin's history, the monthly TSI has crossed bullish with maximum compression. Note the cross bullish down here following historic Bollinger Band compression. And remember, historic compression precedes historic expansion. Strap in, because what's coming is likely going to melt faces. When I say things like Bitcoin is going to melt faces, what's coming is going to melt faces, keep in mind, a lot of this comes down to Bitcoin's volatility. So let's put that into perspective. Here is risk versus return from 2020 to 2023 for all of these asset classes. So pause your screen, take a good look at that. And notice the same chart, when we add in Bitcoin, shows that Bitcoin is in a completely different realm. This is a completely different asset class. And I often say things like Bitcoin will continue to do Bitcoin things. Bitcoin will continue to smoke every other asset class. And this is exactly why I am so heavily focused on Bitcoin. This is in a different universe. Just dollar cost averaging into Bitcoin and sitting back and doing nothing really is the cheat code, okay? Really is the cheat code for getting fabulously wealthy over time. And whilst Bitcoin's high volatility gets a bad rep sometimes, keep in mind, with those huge drawdowns also comes huge gains. Below, you can see the drawdowns from the 2-year high on the left and the gains from the 2-year low on the right-hand side. As of last week, with weekly data ranked from smallest to largest drawdown. And what do you see? Yes, Bitcoin has the largest drawdown. Although important to note, in my opinion, we're talking 54% now. Now, a couple of 4-year cycles ago, we were looking at a 90 vol asset class, meaning it draws down 90% in a bear market. Then it became an 84% drawdown, aka an 80 volt asset. And as of the last bear market, when we went from 69k to 15k, it became a 70 vol asset class. The drawdown was 70%. We're now looking potentially at only a 54% drawdown. Meanwhile, the outsized gains, as you see at the hard right edge at the bottom, 84%. There really is nothing that compares to Bitcoin. Bitcoin is the apex predator asset class. So here's a rather messy chart. I usually don't like to have charts this messy, but if I draw your eyes to the yellow lines, right, we're in this sideways range. All the while we're chopping around in here, then we're in no man's land. Of course, break above that and it's bullish, but break down and we're going to be targeting my 95-ish from all the way back here at the top. So hopefully we can do that. Hopefully we can see that. For now, it kind of looks more heavy than bullish in my opinion, but there's nothing to say this won't break out to the upside. So one day at a time, as always. 10-year yield, I'm hoping to see this continue to come off. And that's kind of what I expect to do, since we likely have the rate hikes out of the way. They're likely behind us now. Bitcoin, I know a lot of people are going to be worried about this. A lot of people are going to be thinking, oh no, failed to break out higher. Probably this has to come next, right? I know a lot of people are going to be talking about that, but I really don't think that's what we're seeing. In fact, I think what we're seeing is that move towards the half cycle low. So the half cycle low is actually not due until around day 30. So about 2 weeks from today. And I would kind of speculate that we'll probably see this thing bounce around, hit that pullback into the half cycle low, and then resume an uptrend. Okay, so I still maintain that this thing is a lot more bullish than people are giving it credit for. XRP trade, for those of you who are interested, is continuing to move higher, as you can see. So long and strong continue to push there. The crypto-related equities are starting to look an awful lot better now the stock market is getting some relief, right? Starting to look a lot better. There's Coinbase. As you can see, MicroStrategy as well looks an awful lot better, doesn't it? And here's Riot again, looking an awful lot better. Same is true of Marathon, of course. So we'll see what can happen from here. Long and strong continue to push. Gold looks like it wants that cycle low to me, so hopefully that can show up next week, and then we'll take it from there. Silver, not at all interesting. Kind of looks like it wants lower in the meantime. The oil short starting to look like it has a lot more credibility now. A lot of people back here. This was one of the most unpopular trades I've ever taken in my life. And when I was short here, most people couldn't believe their eyes. They were thinking, what? No way. We've got this whole war broke out in the Middle East. $150 a barrel is the only logical thing. But now it kind of looks like, you know, maybe there was something to this technical analysis and perhaps we can continue to move lower. So unless we break out of this downward sloping red resistance line, we'll continue to push this short. Last but not least, the stock market. Now, this is undeniably a nice swing and a reversal. We are also undeniably back into this area where I wanted to close the week, as that could potentially set us up for a breakout into next week. But with that said, if I draw your eyes to this upward sloping red support line, right, what do we have? We have breakdown, possible retest before resumption lower. And that's also what the cycles tell us. Why? Because we found a cycle low right here. We came up and we undercut that cycle low, didn't we? We undercut that low, meaning we have a failed cycle, and it tells us to be bearish for this daily cycle at the very least. So I'm not excited about this until we can hold and then look to break out. Otherwise, my bias still remains that we're probably going to see a rollover here into that cycle low, and that cycle low should probably form below this current swing as well. So we're probably looking for a lower cycle low before we can even think about reversing. So there may well be some work to do. Now, invalidation for this is if we do something like this and break out, then we get long and we say, yeah, fine, that was just a weird cycle inversion. We'll end up marking this as the cycle low, and we go from there. If none of that is making any sense to you, then go and see my How to Trade Cycles video. It explains all of that in there. Overall, though, we have done the bulk of the hard work. We've gotten back above this. So all we need to do is close somewhere in here, and that sets us up for a potential breakout next week, despite the fact the cycles are down. So time will tell, as always, one day at a time. It's still not time to attack. But we have broken out of this, haven't we? Now, that's pretty steep and prone to failure. But it's also true that we're looking at this right here, okay? Potentially looking to close a breakout of this downward sloping red resistance line. Now, given where the cycles are and they've failed, I'm not interested in taking that breakout, especially because we're back testing this upward sloping support line, now resistance. But like I said, get above this downward sloping red one at the top, and it is party time as far as I'm concerned. Nasdaq an awful lot closer, isn't it? But, and when I say that, I mean to this downward sloping blue resistance line. So an awful lot closer than the S&P. But again, if I draw your eyes to this one right here, okay, what have we got? Breakdown, possible retest before resumption. And that's the same setup as on that oil short. And we know what happened next for oil, right? So I'm not jumping in here, but close a daily candle above that. And of course, we will be long. Dow Jones right into resistance. Okay, so close a daily candle out here and we can look for this. Okay, and then despite some significant deviation here and here, ultimately, this red squiggle of mine wouldn't have been too far from the truth, right? It wouldn't have been too far away. So again, if we are going to break out, then we have to respect the breakout and get long. But it hasn't happened yet, and it's Friday as well. I don't like to take on weekend risk. I typically don't like to open new positions on a Friday, although occasionally I will do so. But for the most part, probably going to wait for Monday. If we can see something like this and then look for a retest on Monday, that would be a very nice entry. So very, very nice setup. A lot of the repair work seems to be feasible, but it hasn't been repaired yet. VIX probably going to close the week below 16. And again, that sets up seasonality for the downside in the VIX and of course seasonality for the upside in the stock market. So overall, things don't look too bad. I'm noticing the Russell 2K got a massive bounce yesterday off of this support. See these lows down here. Interestingly enough, these lows were previous highs multiple times as well. So nice swing, nice candidate here. Again, the angle is steep, and that's why if I draw your eye to this purple one, you know, the breakout's failed multiple times here because this angle of this trend line is so steep. So I'm still sticking with the downward sloping pink resistance line. In fact, we're going to get rid of that one because we don't need it. So all focus is on this, okay? Get above this, and again, it could well be party time, something like this. But for now, there's a lot of work to do in my opinion. Because the angle of this downward slope is significantly less steep than the prior ones, then we can say this has significantly more probability of following through, just like it did back here with this blue one. So for now, again, a little bit of patience, right? A little bit of patience. We certainly could have gotten long in here and had a tight stop. There's nothing wrong with that trade. That's just not how I personally like to do it. But a little bit more patience will see us probably, if we're going to break out, and if we do, then we can get long and target much higher numbers for the Russell 2K. Just had a look at the member setups off camera as well, and they all look fantastic. So I'll cover those in the weekend update video for members only as always. For everyone else, have a great weekend. I think we can say, what a week. I told you it would be entertaining, and I was certainly entertained. I hope you were too. So it sets us up nicely for next week. As ever, take things one day at a time. Flexible, open to all outcomes, open to being proven wrong. No ego, no bias, simply trading what is in front of us. Have a great weekend. I love you all. And until next time, take care from me. All the best. Cheers. Bye.